Everyone thinks that they're really clever and, I'll buy when it's cheap. But psychologically, if you're new to Bitcoin, you won't. And realistically, you're not going to be smart enough to catch the dip or be around to buy the dip too. So there's like two things going against you right off the bat. That's why I think doing a lump sum buy is probably better. And yeah, maybe it'll go down 10%, 20%, but you just have to look at it from a bird's eye view, like where is this going? And I think that's what a lot of people miss. A lot of analysts miss that, a lot of critics miss it, and it is really the replacement of all money. And if you can't stomach 10-20% drawdowns holding an asset that's going to replace everything, then you probably don't deserve it.
Samson Mow explores the revolutionary possibilities of Bitcoin and forecasts a seismic shift toward hyperbitcoinization, a scenario in which the uptake of Bitcoin sharply increases. In his ideal world, nation-state interest, institutional demand, and macroeconomic volatility would all combine to raise Bitcoin's value and usefulness to previously unheard-of levels. Samson highlights the critical role that ETFs, wallet infrastructure, and geopolitical dynamics play in removing obstacles to the mainstream usage of Bitcoin by reflecting on past trends and adoption rates. He thinks that these factors might push Bitcoin closer to its $1 million goal sooner than most people anticipate. Take a moment to like this video, subscribe to the channel, and turn on post notifications for more insights like this. Thank you for watching and enjoy the video.
Yeah, I would say the biggest thing that people need to consider is, what if the current system that you grew up with, you're familiar with, is just gone one day? And I think that's where we're headed. If you look at the macroeconomic environment, all signs point to some sort of systemic failure of the current system somehow. Either it just falls flat, or there's just a debt jubilee and everyone just wipes the slate clean and we rebase to Bitcoin. But none of this is sustainable, and the US debt is probably the best indicator of that, right? We're at $36.2 trillion now in debt, and that's growing very rapidly. I think 200 billion was just added in the last couple months. So that compound interest is brutal. I mean, compound interest is great if it's on your savings, but on debt, it just quickly goes exponential. I think you'll still see some volatility, but the volatility is going to be muted because there's just so much buy pressure, and now you have MicroStrategy in the S&P 100, and that makes them automatically allocated to a lot of passive funds that just will invest regardless of the price. So you have a new buyer of last resort. You already had buyers of last resort, which is us, the hodlers, but now you have another one, and a big one too. So we'll still see volatility, but you'll definitely see a lot less of those massive dips that we've had in the past. I think if you can lump sum buy, just do that. DCA if you have a lump sum buy already, but if you're trying to get in for the first time, just do a lump sum buy and then DCA with what you can. But if you can lump sum buy, it'll be better. Everyone thinks that they're really clever and, I'll buy when it's cheap. But psychologically, if you're new to Bitcoin, you won't. And realistically, you're not going to be smart enough to catch the dip or be around to buy the dip too. So there's like two things going against you right off the bat. That's why I think doing a lump sum buy is probably better. And yeah, maybe it'll go down 10%, 20%, but you just have to look at it from a bird's eye view, like where is this going? And I think that's what a lot of people miss. A lot of analysts miss that, a lot of critics miss it, and it is really the replacement of all money. And if you can't stomach 10-20% drawdowns holding an asset that's going to replace everything, then you probably don't deserve it. Because once they start signaling that they're buying, I think it's going to be very hard to reach that target, right? Just hitting that target is difficult. I think Saylor was able to get to his target 1% and beyond because he started in a bear market, right? He started when the price was low. Now the price is at 0.1. Bitcoin can easily 10x, and we've done 10, 17x before too. And with the nation states buying with unlimited bullets, they can really quickly bid this up very quickly. So the question is how fast they can move is one dimension of it. If they can go quickly, maybe there's a chance. But I think as soon as they start to buy in numbers, serious buys, like buying 100,000 coins, reaching that 100,000 target, I think we're going to start to see Bitcoin shoot up very rapidly to maybe 5 million a coin.
Samson Mow criticizes China's ban on Bitcoin mining and exchanges, highlighting how these actions deny the nation of its chance to emerge as a worldwide Bitcoin giant. On the other hand, he believes that the US is well positioned to welcome Bitcoin's rise and ensure its financial dominance for many years to come. Samson also emphasizes the limited supply of Bitcoin, pointing out that with just 2.1 quadrillion Satoshis in circulation and 8 billion people on the planet, owning Bitcoin will grow more and more exclusive. The actual worth of Bitcoin's limited quantity will become evident as more people are priced out of substantial accumulation. He envisions a future where everyday transactions, like buying a burger, could be conducted in tiny fractions of a Satoshi, drawing a stark comparison to how fiat currency purchasing power has evolved over time. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Now, let's get back and hear what Samson Mow has to say.
If a nation state is buying in size, you kind of have to understand that you probably shouldn't sell it. So when Bitcoin starts to go really exponential, like it's going from 1 to 2 million to 3 million, then I think people are going to question, what exactly am I selling the Bitcoin for? Why am I selling it for the dollars that the government is spending to buy Bitcoin? And what am I going to do with the dollars? What is the interest rate on those dollars? Like, how am I monetizing my dollars then? And at the same time, geopolitically, countries are moving away from the dollar. So maybe it's declining in usage in international trade. So there's a lot of dimensionality to this that I think people have to think about and consider. But they're definitely going to see it firsthand, and they'll have to deal with it on the spot when it hits. But I just think there is a point at which you can no longer be oblivious to what's happening, and you have to understand, like, okay, I'm going to sell Bitcoin to the government for $5 million, and what do I do with that now? Like, merchants are starting to price things in sats. So did I make a bad trade or a good trade? I think they'll find out it's a bad trade. If you look at my Max Payne theory, it's that most people in the world are going to get priced out of buying Bitcoin at a cheap price very quickly, because that's the maximum detrimental thing to the most amount of people, right? And that's probably what's going to happen, that the power dynamic and economic dynamic in the world doesn't really change. The poor countries don't really get ahead. Maybe Bhutan and El Salvador now, because they have a lot. But, generally speaking, most countries don't have a policy in place or even a plan to put a policy in place. So they'll be left behind. And the US is going to be still the dominant financial center in the world. I think China really missed the mark. They just missed it. They cracked down on exchanges. They cracked down on mining when they could have been the Bitcoin superpower. And yeah, the US is going to end up as still dominant for another couple hundred years until MicroStrategy becomes a country, and then we'll see.
Yeah.
But I think we're going to see it go up, and people are just going to wish that we had big drawdowns so they could buy cheaper. Because if you think about it, your average Bitcoiner that's making normal wages is going to buy a lot less Bitcoin as the price goes up. So they're going to hope that we do have a dip or we do have a crash, and it just won't come, and their ability to stack will just drop gradually. Or not so gradually.
Yeah.
Generally, these things happen very quickly. The expectation, I think, of a lot of people, including Bitcoiners and some Bitcoin bulls, is that it's going to happen over like a 20, 30-year period. But if you look at the collapse of currencies, they happen very rapidly. And it's typically very chaotic. So we'll see how it goes. But this is sort of why I think it's important that we do outreach and we try to get parallel systems into place where countries can have both currencies at the same time, Bitcoin and their native currency, and transition as gradually as possible. But I would say Max Payne theory dictates that it's going to happen very quickly and chaotically, because I think the key message here is that there is not a lot of available Bitcoin. So if you look at the diagram, the top of the bottom pyramid is what is left for mining and available for sale. It's a very small amount, but the available capital in the world is massive, and all of that has to cram into this little top cap piece of a pyramid. And when I look at available capital, that's like real estate. It could be derivatives backing other things. It could be gold. It's like everything else. Somewhere numbers in the range of, I don't know, $1 quadrillion, maybe 1.5. It's all rough estimates that we have when you're trying to estimate the value of everything in the world. But it is pretty big compared to the couple million coins that might be available for purchase. People don't want bad money. Like they'll realize quickly, like, okay, my neighbor is not accepting it, or the corner store is not accepting the fiat anymore, and they'll quickly realize that they should start buying in Bitcoin. And at a certain point at which that happens, people just start pricing it in Satoshis. Like we already have the Lightning Network transactions mostly priced in Satoshis, right? People are using Sats as the unit of account for Lightning, and it's been like that for years. So that's just going to accelerate, and I think it makes sense. Like if you divide 2.1 quadrillion Sats amongst the 8 billion people in the world, you end up with a number like 259,259 Sats per person.
Yeah.
And we know that's not possible to achieve because the ETFs hold a massive amount, MicroStrategy holds a massive amount, and there's hodlers. So what is the real number? Probably closer to like somewhere in the 10,000 to 50,000 Sat range. And if you look at purchasing power of the dollar, going back 100 years, that's kind of roughly right. You paid, I think maybe in the 60s and 70s, you'd pay 15 cents for a burger. So maybe you'll pay 15 Sats for a burger, but I think maybe lower. It might be like 2 Sats or something like that. But that kind of number scale seems to make sense. If you go back to that 1960s earning and wages, you make 1,000 Sats a month, and in a year you make 12,000. House maybe costs 2 years of your wage, so it's 24,000 Sats.
Samson Mow emphasizes the urgency and possible chaos of Bitcoin's rise while presenting a bleak picture of the state of the world economy. He discusses his max pain theory, which holds that most individuals will be priced out of having access to reasonably priced Bitcoin sooner rather than later. Bitcoin's limited supply and rising demand are driving its sharp price increase, which will disproportionately impact nations and people who lack aggressive measures to adopt the cryptocurrency. The United States is positioned to continue to dominate the financial world for generations, while poorer countries, with the exception of a handful like Bhutan and El Salvador, who have adopted Bitcoin-centric strategies, run the risk of falling behind. Samson claims that China lost its opportunity to take the lead in the Bitcoin revolution because of its restrictions on Bitcoin exchanges and mining. Rather, the United States will gain from this lost chance. Samson also predicts a future in which the restricted quantity of Bitcoin will be increasingly more noticeable as billions of dollars of global capital, from derivatives to real estate, compete for it, increasing demand and pushing prices upward. He notes that the shift from fiat to Bitcoin is unavoidable, but warns that it may happen quickly and erratically, similar to previous currency failures. He imagines a world in which wages and prices are expressed in Satoshis, the smallest unit of Bitcoin, as its acceptance picks up speed. Wages might be in line with a purchasing power scale reminiscent of the mid-20th century, and daily activities like purchasing a burger might only cost a few Sats. In light of Bitcoin's growing value over time, Samson speculates that even sub-Satoshi units would someday be required for business transactions. And as always, happy investing.